Warning signs of the incoming real estate crisis you can't afford. This week in Military Wealth Club, we are covering all the crazy stuff going on right now. We have markets reeling because of tariff chaos, right? Every other day it's something new with the tariffs. We have Trump openly attacking federal chair Jerome Powell. That's a big deal, and that's been going on for the last couple years, actually. And anyways, we'll get into it. Look, and China's AI ambitions are under siege. They are cranking up, and as we know, they really want Taiwan. They make a bunch of semiconductors in Taiwan. So what does that really all mean? And if you didn't know, Florida is having a condo crisis, and it's not new. The condo crisis is not new. It happened here in Denver as well, I believe in the late 90s. But look, Florida's condo market is in a free fall. Can it go any deeper? And is there anything to buy up, right? If there's a crisis and a lot of people are selling tons of condos, is there an opportunity? Well, we're going to cover all of this at Military Wealth Club. If you don't already know, I'm Mercedes, the Military Realtor, and as a service member homeowner that has served in your boots before, I help you use your VA loan to save money, energy, and time. And while you're doing this, you're creating wealth and security for you and your family, right? So let's get right into it. There's no fluff. There's no courses for you to buy. There's no put your email here, anything like that. Let's get right into these hot topics, all right? So number one, uncertainty about tariffs has become pervasive in the economy. So the stock market, all markets don't like uncertainty. Now, traditionally you would think of, well, previous to this, was there uncertainty in the market? Were things always so sure? To an extent. If you had the tools, you had the experience, you had the foresight, you could guesstimate trends and waves in theory, right? When there aren't black swans and things like that. But now it's just, you don't know. You don't know how he's going to wake up on the wrong side of the bed, right? Trump's going to say, you know what? We're putting a tariff on the sun. 200% on the sun. We're tired of the sun just getting what it wants, without negotiating. You never know. So look. The Federal Reserve has a beige book. It's called a beige book. You really don't need to know much about it, but it confirms pervasive uncertainty across the economy due to international trade policy. Okay, now this uncertainty is linked to significant market sell-offs, increased recession odds, and a shift in consumer spending. Companies and private equity firms are struggling to make long-term supply chain decisions amid all of these policy shifts. And Trump has suggested tariffs might decrease but won't go to zero. All right, looks like we're striking a lot of deals with a lot of countries, but the big one is China. And really, I feel like all of this was not for China, but the biggest move was if China was going to work with us or not. And China's calling the bluff right now. China's calling the bluff. So why does this even matter? Well, global trade, investing in business costs. It costs something, right? And with all of this volatility and economic slowdown on top of recessionary periods here in America and also global as well, it affects the whole down line. So if we start at the top when it comes to wars, banking, all that stuff, it all trickles down to real estate, to your stocks, to bonds, all of that. So we need to know this at the top, at this top level here, because it all trickles down. So with tariffs constantly in flux and uncertainty, just that's the buzzword, uncertainty, right? So with the policies going back and forth, pause, no pause, this much, that much, right? And uncertainty still moving around, how should investors and businesses adjust long-term strategies, right? And my mindset on that is, I feel like we're getting very nationalistic, and we're going to be doing that for the next 5 to 10 years. We may bring manufacturing here. We're definitely going to bring a lot of energy here, and we have to plan for that as best as we can do and just route out all of these scenarios. What's possibility A? What's possibility B? What's possibility C? And let's do the best that we can. But we're beefing with China, and they produce so much of what we consume. We have a consumer economy, and they have a manufacturing economy. All right, so let's keep it moving. Number two, Trump renews attack on Federal Reserve Chair Jerome Powell. right? So President Trump has escalated attacks on him, calling him a loser and demanding rate cuts, right? How is that crazy for a president to call another American official a loser, all right? Oh man, and Trump previously he threatened to fire Powell before, but he can't fire Powell. And he retracted that as well, saying that. And Powell's recent remarks suggest that Trump's policy could worsen inflation and the economy. So who would have thought Trump's tariffs are causing inflation and making the economy a lot worse here in America? All right, but Jerome Powell, he maintains the Federal Reserve's independence, right? It's him plus all the heads of all the reserve banks, and he intends to serve his full term. The question has come up before, can the president fire him? No. The answer is no. Now, can there be other ways to possibly get him removed or to make it so that he wants to resign? Now, that's a different question. But why do we care about this topic? Well, when it comes to the chair of the Federal Reserve, which if you don't know what that is, we're going to chalk it up as America's central banking system. Now that you have the one chair, when you have the one chair beefing with the president, and Jerome's not even beefing with he doesn't want any beef in his speeches, in his talks. He doesn't say anything derogatory or malicious towards Trump. It's Trump's attitude towards Jerome Powell. All right, we know what Trump wants. He wants to be a bully. He wants them to pull the levers, right? Because when it comes to inflation, when it comes to these rates, the Federal Reserve has the power to cut the Fed rate. And cutting the Fed rate is great for some folks, but as we saw at the end of last year, we had 100 basis points cut and actual mortgage rates didn't change that much. Now, why would Trump want us to cut rates? Well, cutting rates makes Americans think that money's cheaper, which, like I just said, we cut by 100 basis points at the end of last year. Mortgage rates didn't necessarily drop by that amount, by a whole point, right? Now, on the contrary, the Fed rate doesn't just go towards mortgages. It's all money. It's the cost of money. So when people say, oh, money's cheap right now, right? In a sense, they're talking about this. Money is easy. It's cheap to get. Right? It's cheap to finance. That's the point right there. That's what they're talking about right there. So if you got the two people that run different levers in this economy, I'm not going to say going back and forth because Powell is not going back and forth with Trump. But it's just not good. We're not on the same team. Aren't we tired of feeling so divided in America? Like it's taking Russia and China opposing us, which they've in a way have been doing for decades, but it's not even taking that yet. We're still so divided here in America. I wonder, what is it going to take? Is it going to take for you to see Chinese troops, paratroops coming into America, into Kansas, into California, into Washington? Is that what it's going to take for us to finally come together and say, hey, we got to stop bickering about all this dumb little stuff, right? I don't know, America. But anyways, let's keep it moving here. So, look, you have President Trump beefing with Jerome Powell, the head of the Federal Reserve. It's going to keep going. Let's see how it shakes out, though, and hopefully they can work together to create the best result for us, the American people. That's what matters. Florida condo owners are going through a condo crisis, right? And they want out. With the housing market shifting, you have condos staying on the market for over a year. Think about that. Over 365 days on the market for a condo. In Florida, why? Why wouldn't you want that? Well, Florida's condo market is experiencing a new crisis, and different metro areas in Florida, different markets in Florida have previously had condo crises as well. We don't want to think that this is just a brand new concept, okay? But we have an increase in costs at these condos, insurance, upgrades, new regulations. There was a collapse. And ever since then, there's been a lot of regulations, as there should be. But we do know in construction that there are a lot of regulations that create a lot of costs, which make it I'm not going to say make it, which inflate the costs, of course, but do we need those regulations? Do we not? Safety, right? Well, what are we really talking here? So let's keep it moving. So this is forcing desperate owners to sell, flooding the market and causing prices to fall, All right, nationally, the home building season started poorly, with March housing starts plunging steeply. So March housing starts as them starting to build, right, plunging, which that's a good indicator. Starts and also permits are indicators on what's possibly going on in that area. So LA saw a 50% drop in new home permits in quarter 1 of this year, worsening affordability, right? And about 33.9% of active listings had price cuts in March, right? So that's over a quarter, right? A price cut. Think about it. You put a property up for $500,000, and 33.9% of those active listings are taking a cut. So there's only two reasons why you would cut, and I would really say one reason. I would really say one reason: mispricing by the realtor. And now the cause of the mispricing by the realtor could be many things. Could be just a base of their own experience. They mispriced it incorrectly off of their experience. Sure. Two, the market shifted so quickly with what's been going on over the last 90 days with Trump coming in, tariffs, the stock market crashing, blah, 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 that now we could, right, we're shifting from a seller's market to a buyer's market, where now a lot of properties are going for under than what they're listed. So right here, 33.9% of active listings had price cuts, over a quarter, right? I mean a third, a third of listings roughly had a price cut. So a third of them. Now, if there's a price cut, that's telling you something, because the market is telling you something. If there was a price cut and then it sold and it caught, that's the market telling you this is the price. We're not going to say exactly, right? We're not going to say exactly, but just about. There's a reason why during your open house you don't get anyone come in, and it's most likely you didn't price it right. You're not pricing it for where the market is going. If you price it right at this moment, but it's going to list, or you see that there is a downturn, you have to price at that time. Whether that's your own experience, or, which you can't necessarily control this, but the random stuff that happens in the news and stuff like that, of course. Now, I've been calling a downturn or recession since 2023 now. And I get it that when it comes to cyclicality, let's say seasonality here, between winter, spring, and summer, we have an uptick in real estate. On average, across the United States, summer months, everyone's out of school, PCSing, whatever it is, and then winter comes, people don't want to move around, stuff like that, right? As it as it warms up through winter into spring, the market goes back up again, and it's cyclical just like that. So even knowing that, I see the stuff that's going on with Trump. So in January, a little bit of turbulence in the markets and stuff like that, right? So that's why it's important as a realtor to just have some insight. Well, you could watch this every week and get all the insights you need, right? Just have some insights on what's going on in economics overall. Because if I could have bet, I would have said these first 120 days, pretty wild, pretty up and down. And I did bet on it. I did bet on it because earlier this year and ended last year, I sold a lot of my stocks because I had a feeling that, hey, Trump's going to come into the office. He is known to be turbulent. Markets don't like turbulent. They don't like uncertainty. Now, why does all of this matter? Well, this real estate turmoil directly affects homeowners and investors when it comes to condos. We have an increase in prices, and that is making them able to foreclose on you just due to HOA. People don't realize that. Now, look, your mortgage could be fine. Right, your insurance itself could be fine. Let's say your taxes are fine. Let's say your interest rate's fine. Let's say your principal's fine. Great, but you still have HOA, especially in a condo. And if they're bringing up all the prices, right, your HOA may go up, or there may be a special assessment. Right, there may be a special one-time cost or something of a $70,000, and now you're like, how do I handle this? So we've got a bunch of people fire selling condos, and I wouldn't necessarily put my money into that unless the number is right. The numbers have to work out. You could have such a high increase in insurance and HOA dues, but you may find the one person that they're selling the condo at the cash value extremely, extremely low because they're just tapped out. And to you, it may make sense. Right, I remember I had a real estate instructor, tell me about condos going for $5,000 to $10,000 here in Denver during a condo crash. I believe that was, like I mentioned, in the late 90s. Right? Imagine that. Now, those people that held on were able to mathematically, and it made sense for them in that position. Those people that held on and, let's say, rented them out, short-term rentals, long-term, whatever it is, I would bet that they're doing pretty well. If you're getting in at such a great purchase price, that's why all of it's an equation. And I don't want you to get caught up on things on being a purchase price, or just the interest, or just the insurance, or just the taxes, or just the HOA. It is all together, and all of these levers can move, but you have to be able to protect yourself, because there's a lot of things that you can't control. You can't control taxes, you can't control insurance, you can't control HOA, right? Your interest rate hopefully is locked in. Do not do ARMs, please, unless you know what you're doing. Most likely an investor. Do not do ARMs, and those are adjustable rate mortgages. But your interest rate, your APR, all that's interest rate is locked in. Great. Your principal locked, but the principal could vary too, because if the market's really hot or really cold, right, that fluctuates there. So you got to see that there's levers to every single part of your mortgage. Every single part, there's levers there, and you got to know how to protect yourself, and how to, shook and jive this way and that way, so you stay out of trouble. Sometimes the taxes are going up. Sometimes insurance is going up, but maybe the property value is going down, right? Or maybe they're all going up at the same time, right? So we plan, and we adapt and overcome and keep moving. So let's keep it moving here. Man, so the U.S. tries to crush China's AI plans. Wow. So there's semiconductor restrictions, and this is really driving a lot of markets. Don't forget that semiconductors, the whole chip space, was holding up the entire stock market after COVID, all the way just up until a few weeks ago. Pretty much, right? Semiconductors, AI, it's the new hot word. It reminds me of .com, of the internet back in the late 90s and early 2000s, right? Same thing. So we have the U.S. government implementing stringent export restrictions, again, against China, requiring licenses for advanced AI chips. We're talking NVIDIA and AMD chips that are heading to China. And we're trying to curb their progress. This is literally the space race, right? If you remember decades ago, there was a space race. Who was going to get to space first? Us or Russia, right? All this money going into it. Very, very intriguing, but it wasn't about space, right? So we see a lot of this space stuff with Elon's rockets and all this stuff and space and this and that. Look, it's about the tech. They really could care less about space exploration, Some of them may be interested at looking at exploration to go to the moon. Sure, billionaires, right? That's not going to be us. So please do not get wowed by that. It's not going to be us. It's going to be for the extremely, extremely rich all the way up there. So basically, they're trying to curb China's AI development, especially DeepSeek. Right, DeepSeek is competing heavily against ChatGPT, and if I remember correctly, I think it's free. I don't know, but that's revolutionary. So this is forced NVIDIA to take a $5.5 billion charge and end its ability to skirt previous rules by tweaking chips. So NVIDIA, they were tweaking chips slightly and still sending them to China to get through U.S. restrictions. Right, and they want to make their money, and China's a huge market, so they did what they had to do. But now we're really trying to squeeze on that, especially after China called our bluff on tariffs. Right now we're trying to do anything we can, and I believe this represents an escalation in our trade war. Some people are saying we're not escalating the trade war, and we've gotten to a good middle ground. I absolutely don't think so. We're still not even a month in. Of this particular thing, right? This trade war, and it's just going to continue escalating when they're ready for it. If that makes sense. It's going to escalate, but it's all planned in a way and controlled, and when they're ready, they're ready. You know what I mean? So we have to be ready before them. So if you have cash that you want to throw into the stock market, into real estate, whatever it is, we have to be ready for before when they're ready. So when they say it's time to go, we're ready with our cash to buy properties or to buy stocks because of a down market. All right, so let's keep it going. Look, as the U.S. actively tries to limit China's access to AI, what are the potential long-term consequences for innovation, supply, and the US. We really have to consider it because what do these chips do? These chips are providing compute power. These chips are providing problem solving capabilities. These are the brains, and they're building robots. We already know that. They're building full humanoid robots. They already have assembly line robots, arms, all these things, right? So they're building the brain so that this thing could calculate, can problem solve, and instead it can replace many of us because we make a lot of mistakes, we get tired, we need PTO, we got kids, you know, you're taking 20 minutes on lunch instead of 15, all these things. The chips, they don't need that. They need to be made, they need to be cooled, and then every once in a while upgraded, and that's pretty much it. And that's what we're doing. So I need you to think about that. Think about, is your career, your profession possibly in trouble? And if so, how do you incorporate AI into your profession to make you better, right? Because AI, you don't want it to necessarily replace us. Some functions will be replaced 1,000%. For many of us, though, it can be applied to our toolbox, and it's just another tool in our toolbox to use, and it can enhance your productivity or your precision, whatever it is, right? But we need to think forward, please, and whatever you do, I want you to stay employed, I want you to be protected, I want you to have a specific skill, a specialized craft, whatever it is that AI cannot run out. All right, so let's keep it moving with gold hitting record highs. Yes, 3,500. I remember when it was like 2,300 last year, right? And this is amid market uncertainty. I love gold. I buy gold. So let's talk about what's happening. So prices have hit a record of 3,500 an ounce, right? And this is a move that is linked to market turmoil stemming from Trump's attack on federal chair Jerome Powell, on tariffs and stuff like that. So when markets are uncertain, especially the stock market, the bond market, real estate market, overall all markets, people put their money into SOVs, right? So is this a good storage of value right here? Gold. And the answer is yes. Over thousands of years, it is the only currency. Some will say, well, it's not a currency, it's a commodity. But look, it's the only commodity currency that has stood the test of time. And we always go back to gold, as weird as it is, right? It's used in a lot of stuff, but at the same time, it's not the rarest thing ever, right? But just through history, it has maintained its value. So gold is increasingly seen as a hedge against inflation, recession fears, and potential dollar weaknesses with the banks and foreign governments. So that's what I'm telling you. When things are uncertain, people go to gold. I need to store my money, gold. I don't know if the dollar's going to do well. Let me put it into gold, right? And Bitcoin's called the digital gold, but I like both. I like the digital and the physical gold. But we really have to think about, with gold hitting a new peak and potentially signaling a loss of confidence in our regular banking system, that is a concern. That is a concern, and that may push us into the digital crypto phase, that new age, right? How should we long-term investors incorporate gold or other precious metals into our portfolios? Now, for me, I would say it's one of the top things that I like to DCA into every single month, right? Gold, Bitcoin, and then you have your top portfolio hitters, maybe your top 10, and then you've got some riskier small cap plays. I'm not going to give you a certain percentage of allocations, right? Very much. But that's about what I would do. Oh, man. And we have Bitcoin decoupling from NASDAQ. Digital gold. I told y'all, Bitcoin is that digital gold. And with this recent market action, it's showing that Bitcoin's price is breaking out of its downtrend, because it was going down for a little bit, and it's demonstrating strength even as the tech-heavy NASDAQ struggles. Right? A lot of people were saying that these were both coupled, or most people would say, well, Bitcoin is coupled to the indexes, to the overall, and it's been showing differently. I'm not going to say opposite completely, but it's showing differently. So this divergence is fueling the narrative that Bitcoin may be decoupling from traditional risk assets and starting to behave more like digital gold, right? And that is that it can offer purchasing power outside the conventional financing system. So it's starting to act more like gold does in an opposite manner. I'm not going to say in an inverse exact manner, but as uncertainty goes up, people seek SOVs. So now that Bitcoin has been more adopted into our traditional system now, it's more normal thanks to Larry Fink's ETF and a crypto summer a while ago. It's now acting like a store value like gold would. So something to track for sure. Something to track. How do we think though this is going to affect our portfolio over time, right? With Bitcoin and them stocking up on it, and then kind of the hype going down. I really see us going to a digital crypto system within the next few years. I feel like there's going to be an event of a bank run of sorts, and all the faith in our dollar and in regular fiat money is going to disappear. We've had some small banks failing, of course. We've had some hacks, right? That's scary. And we have to think about these black swan events that get people to make a bank run, where they want to go to the bank and say, give me all my money now. I don't feel safe at being here. I want to make sure I have it. So they go request however much money. But as we know, banks aren't required to keep all of that money. And a lot of times they leverage that money out and they're lending it out almost 10 to 1. So this $1 is actually lent out to 10 other people. Your $1 that you put in there. So you put in that $1, they're lending it out already. And they only got to keep a certain amount of that dollar in their bank. Right? So imagine you go to the bank, you give them $1, immediately they lend out 90 cents of that dollar and they only hold 10%, 10 cents of that dollar. So then the next day you come in and you say, hey, I want my dollar back. And they say, we don't have it. You gotta give us a ring and come back in a week and we'll have your dollar ready for you. So I can definitely foresee some type of financial or bank run. It doesn't have to be directly due to something related to finances. It can be due to something economically in the world, something out of fear, right? And it makes people want to go take all their money out, right? If I remember correctly, I think the Great Recession was really kicked off by bankers spreading rumors, if I remember correctly. Spreading rumors at the right time, and that led to a lot of people going to go get their money out. So I see something like this happening in the future that really pushes us finally into the digital crypto age. And why do I really think we're going to go there? Because they can track us. That's all it comes down to, because they can identify every single cent, every single crypto, whatever, that's going in or out of your wallet. They have it tracked down to the microsecond. Your grandma can't give you $5 anymore. It's not going to work like that. Everything's going to be seen. Everything's going to be taxed. It's not what I want. I like a decentralized crypto system. That's what we were fighting for in the beginning when crypto was starting. We want it decentralized. We want it fast. We want transactions cheap. Right? That's all we want to do. You can transfer funds from here to here in seconds for very, very, very cheap cost, without people knowing all of your information, right? Your wallet didn't have to be linked to your specific identity, but then you had crypto.com, you have Binance, you have Coinbase. These are pretty much banks just in a fully digital crypto way, right? That's what it is. So I see us getting pushed to that system somehow. I don't know if it's going to be a country coin like a USDC, USDT, whatever it is, but we're definitely going to move into that. I use a lot of cash. So I think about it every time. I was at Sprouts today. I'm at the register, I give this lady money, and she gives me a wad of cash back and coins. And right, aren't you tired of that? Right? That's how they push credit cards, digital, crypto. Aren't you tired of that, being embarrassed in line and having to take 5 extra seconds? And then the person behind you doesn't have any patience, so they're already moving up, and it's like, give me 2 seconds to put this away. Everyone's looking at you. You know what I mean? So I see a really big push, and the big thing is control, right? You have to realize the government, these people aren't here to help us. They're here to benefit off of us. They're here to make money, get energy, get our time. You know, they're here to profit off of us. That's what it is. A lot of people don't realize America's a corporation, and your birth certificate, your social, That's a serial number. Anyways, look, let's not get too deep here. People don't even know that America borrows against each citizen it has. People don't know that. People don't know that, right? All right, let's keep moving before we get too deep into there. And look, we have a huge market sell-off and markets in correction. Do you think this is the time to buy? Look, I wouldn't say that every downturn is the best time to buy. I say take a personal look at your individual stocks, whichever one that you're interested in. Take a look at all their metrics. Take a look at their PE ratio. See what that is on average, right? Take a look at their debt. It's really hard for companies to close down if they don't have a lot of debt or any debt, right? Take a look at their leadership. Take a look at their history. Take a look at if they have dividends if you care about that, right? Take a look at future projects. What are they going to work on? Do they have any government contracts? Are they innovating? All things to look at. But look, we have major stock indexes having experienced sharp declines as we've seen, record declines, right? The NASDAQ having over 1,000-point drops. So with daily drops exceeding 5 to 7% mentioned from the Dow, S&P, and NASDAQ. And one analysis noted that S&P 500 was down approximately 15% from its peak. Okay, this sell-off, which is linked to uncertainty and tariff fears, has really increased our recession odds. I've been telling y'all. Now we have Jamie Dimon and we have Goldman Sachs talking about recession being more likely this year. So, I mean, how does this affect us, right? A lot of us are like, well, I only own real estate, or I only own a business, or I work a W-2 job. I don't care about the stock market. I don't even have any stocks. Why would I care? Well, look, market corrections directly impact our portfolios and they trigger a lot of strong emotional responses. So this all affects different parts of our economy and our markets, from the banking sector to real estate to business to crypto to finance, right? I mean, I put finance in the banking system as well, but it's a little bit different if we're talking about U.S. banking, international banking. We're talking about crypto. Are we talking about the dollar versus the yen, bonds, right? This whole spider web connects in so many ways. So it's important for us to just know a little bit of these tidbits. So from here, we would think, okay, look, we have significant market volatility and corrections, which corrections can go upwards or down, right? The term correction is when people are saying, hey, the market's going to correct, which really just means it's going to a normal level. Well, I mean, is it not correct if it jumped up? And it's kind of like errors in baseball, so a lot of people will see something and be like, yeah, either the market jumped up or jumped down because of whatever irrational reason, and we're due for a correction, maybe a 5 to even 15% type of correction in the right direction of where we should be in theory. Okay, so look, there could be a temporary dip. There could be a long-term dip, which would be a bear market, which I greatly feel that we're in, right? And then you have a bull market as well going up. But regardless of it's a temporary dip or a long-term dip, you should always be ready with your cash and also your price points of what you want to buy a stock at. You do your analysis, you have your setup, your SOP to run an analysis on a stock, and then you can just run that over and over and over whenever you want if you get new data or something like that, and you have your price point. So, hey, I want to buy this stock at 126. It's at 145 right now. Let me set up some alerts. Let me keep watching it. Boom, when it hits 126, I know I'm going to buy 10 shares or whatever it is, right? But at least you're ready before it comes. So please stay ready. Enjoy the dip. Enjoy the bear market. I think we're going to dig a lot deeper into this market before we see a turnaround into actual full bear market upwards. All right. Let's keep it moving and let's actually talk about some airfare for once, right? We really don't talk about travel and planes too much, but Southwest and United cut flights citing macroeconomic uncertainty. So look, if you have the airlines even cutting flights, with the airlines, they barely make any money. But when you have them cutting flights because of macroeconomics, that tells you, right? These things are all connected. These little insights like this can give us tip-offs of, okay, something is happening, right? Because if these huge companies are changing what they do for their profits, It's for a reason. You have to follow the money. If we follow the money, you'll almost never be wrong unless they're trying to dupe you. All right. So we have major airlines that are signaling economic trouble. Southwest cuts flights and pulled its guidance, right, citing macroeconomic uncertainty, which analysts suggest might mask fundamentally unsound economic conditions, right? So things are going sideways, up and down, all the ways. United also cut domestic flights due to disappointing demand. Now, this aligns with the Fed's Beige Book reporting declines in both leisure and business travel. During recession, during downturns, what do we think is going to happen? Not too many people are going to travel as much. That's just what it is, right? Now, why would this matter to us? Well, airline activity is a key indicator of consumer health and business confidence, right? These cuts act as a potential canary in the coal mine, suggesting broader economic fragility beyond just tariffs impact. And it's the airlines. The airlines, they run slim margins already. Look, major airlines, they're sensitive to consumer and business spending extremely. So are we already seeing a cutback, right? We saw Southwest actually start charging for bags. Remember, Southwest was the only company that you could have 2 free carry-on bags. And now they're charging. And I mean, you could check them too. You could check bags. But now they're charging. They're charging calls. And that's why I love Southwest. Remember when they had the seats though, too? And it's still very much like that. But I feel like that's probably what's next that they're going to change. And it sucks. It sucks that there's limited airlines, right? I mean, Elon Musk would probably make a cool airline, or Apple, right? Something like that. Wouldn't that be cool? Like a Tesla airplane? Something like that where everything's just more modern. Like some of these planes, I'm like, what? Like, you guys haven't updated this since what? Since 2004? Like we don't even have this charger anymore. What do But anyways, I think that'd be cool to have an updated, more cool type of airline, but they just run at such a deficit already. I get it. It's difficult for airlines to really do anything. But look, if there's one thing that you do have to know is that you should definitely tap that like and subscribe. Stay up to date on all of my daily content talking about real estate, business, stocks, and finance right here. And look, you need free tools? Go to militaryrealtor.us, all real estate tools, and you find out a little bit about myself and find all my socials there. So go just check it out right now. Type it in themilitary.us while you're listening to this. Take a look at my page, see what's going on there, dig around, see if there's some useful stuff for you, whether it's calculators or guides, and take a look. All right, let's keep it moving here. Let's keep it moving. We got a lot more to cover. But look, let's do a recap real quick. Okay, look. First, we have massive uncertainty around tariffs, okay, which could be stalling the economy and making things real spooky, right? It's not even October yet, but things are getting real spooky out here. Second, we have the conflict between Trump and Jerome Powell, right, the Federal Reserve, over interest rates. I'm pretty sure he softened up and he made sure to articulate, I'm not firing Jerome Powell. And he had to articulate that because he knows that the simplest of words can move markets, and they have moved markets, okay? And third, real estate is seeing major shifts with markets like Florida condos crashing, while nationally, sellers are giving more concessions and signaling potential advantage for buyers. Don't forget, every market is hyper local, right? So possibly ask me or ask your realtor, hey, can you pull a hyper local report to this zip code for this type of property type, right? Townhomes, condos, single family, or all of them, whatever it is. And that could tell you about your local zip code, because even during massive downturns, there are some zip codes, some areas that weren't that greatly affected. All right, the whole national was put out there on TV. That's a national average, not even a median most of the times, but you really got to get micro on that micro level, especially if you're going to buy or sell real estate. All right, let's keep it moving here. We have the great pause of 2025 in real estate. So the housing market is experiencing what's being termed the great pause, right? Pause. So where qualified buyers are holding off on purchases due to economic uncertainty, right? And pair that also with the lock-in effect, where some folks have lower rates 2s and 3%, right? And they don't want to move because they don't want to lose that 2 to 3%, or they can't afford something at the current 6% levels, right? So you have qualified buyers that are holding off, right? High interest rates and affordability challenges. People say affordability. I think it's a wage challenge. We need to increase wages. How about that? So this is causing less activity than typical for the spring season, right? Remember, the real estate market is cyclical. On average, it'll go up during the spring and peak in the middle of the summer and then come back down. So this is leading to significant buildup of pent-up demand among potential buyers that have been waiting for a while, right? Since COVID, well, since post-COVID, since the pivot in 22, we've had a lot of people waiting on the sidelines, right? So current stagnation in the housing market, we're not talking about stagflation. Stagflation in the economy is different than a stagnation, right? It's just slowing down. In the housing market, this creates a relatable narrative for both buyers and sellers on both ends, right? So this dynamic is very important for market timing, right? We can't always time exactly, right? But we have to try to an extent. Now, I like time in the market rather than trying to time the market. All right, write that one down. Write that one down. Don't forget it. So, the release of this demand could significantly impact prices and competition when conditions like interest rates or economic certainty improves, right? So there may not be chaos in a downturn. A lot of people think, oh well, the worst is the way down, right? History doesn't repeat, but it sure does rhyme. So this downturn, who knows? It could be a downward movement with a lot of pent up demand, and then things shift, but it shifted such a way where possibly now all that demand is hitting the market at once, right? And now we have prices being driven up just due to bidding wars, you know, of oh this much, oh this much. I just saw a post, a friend of mine posted that they just sold a property $400,000 over asking. Like who? What? How does that even? Right? So look, a drop in interest rates, a resolution of tariff uncertainty, or something else. This is most likely gonna end the great pause, right? The little stagnation we have in the real estate market right now. And this could unleash the built up housing demand. So what is the market gonna look like if and when this happens? Right? We've had a lot of pent up demand. People are just waiting. People are just waiting for rates to somehow get lower, right? For buying power to increase somehow, for something. And when that something happens and all the buyers are released, once the dam comes crumbling down, what do we think is going to happen? Right? You got pent up demand. The supply may be dwindling down over time as new starts on new construction slows down, I believe, because I believe the starts on new construction are going to slow down due to tariffs. We get 60% of our lumber from Canada, and due to deportations. Now we have less laborers, less skill, which increases labor prices and also increases the time it takes to finish these because the workforce has been cut down and it's been changed. A lot of them, they're working like at night. They're not working in the day. So with all that into consideration, I don't got a crystal ball, but look, be prepared. If you want to invest, be prepared with your cash. Be prepared because when it comes, pause, it'll be here and then it's running back up. And by the time you hear that the market is great and things are doing well, the deals are gone. And the people that have got those properties and they're putting renters in there or got the stocks and they're enjoying the upward market, they already got their gains. You got to move on the rumor and then move on the sale. Or excuse me, move on the news. You know, there's a rumor that comes out, you kind of make your move then. By the time the news comes out, you already made your money, boom, you're selling off. And then by that time, everyone's buying. Once it's out on the news, it's already too late. People made their money. So then now it's already 25%. You go buy in, it goes up 2%, and then it dives down 20%. You know what I mean? Something to think about. Look, something to think about. And look, we have Zillow's listing ban ignites industry-wide clash. It's one of the worst Z words ever. Zillow, implemented a new policy as of April 10th banning listings marketed privately if not also posted on the MLS within 24 hours. So this move sparked immediate backlash, with Compass CEO calling it bully behavior, right? Do you think Zillow's been a bully over the last few years? Zillow and Redfin just running a lot of realtors out of the market, just, man, I'm not going to say destroying people's lives and stuff like that, but to me, it does feel like it's lining up with bully behavior, right? And they have an abuse of market power. You also have another large brokerage, a nationwide brokerage, EXP, their CEO, he stated his company won't use delayed listings and warned Zillow's actions could trigger more lawsuits. Look, we're in the industry, we're tired of lawsuits. Last year was all lawsuits of NAR, this and that. And look, the lawsuits, an instructor told me once, man, these lawyers are trying to come for the job of a realtor, of real estate agents. They don't want us doing these contracts. They want to be the only people that can do contracts for real estate. They want to be the only ones who have the power to do it. You're telling me I can't write a So look, anyways, my instructor was telling me this because he says, hey, it happens all the time. There's lawsuits all the time, and we see a lot of realtors right now leaving the industry, leaving because things are getting hard, right? And that's what we can't do. That's what we can't leave when things are difficult. We can't leave when lawyers are trying to press us to take our pretty much our whole job from us, right? We can't lay down. We're professionals. We know what we're doing, and we have to use our tools. Leaning on company, I'm not saying it's the worst. A lot of people go to Zillow, spend a lot of money to pay for their leads. Just rank. I'm not even going to comment on what type of leads. They go and they pay for the leads. That's okay. I believe if you allow someone to feed you, you allow them to starve you. And if they're not a part of your team, you have to pay them. Sometimes the quality isn't good. Sometimes it's this. Sometimes it's that. You don't control it. You're there just waiting for the bowl every day, and you're hoping the bowl comes. And if they ever change, whatever it is, you're at the mercy of them. So look, I'm not saying I hate Zillow, anything like that. But this major disruption with Zillow in the real estate listing industry impacts agents like myself, brokerages, and market transparency. Honestly, it's in the MLSs, they work with Zillow and Redfin. You know what I mean? So you have the MLS, that's a listing source. Then it could also get funneled into Zillow and Redfin. And then we have possibly like my website where I could put a private listing, or before it hits the MLS, put it on there, right? So that's what we think of when we talk about off-market listings. It would be like my personal website, themilitaryrealtor.us, and you go there and you see a privately held listing. It could be on the MLS as well, but this is on my private page, which has different rules than what can go on the MLS in particular, if that makes any sense. So what I'm saying is there's just a lot of marketplaces here, instead of really just teaching realtors on how to market a property and how to get it out there. So let's keep it moving. I don't like talking about Zillow and these companies too much. It's big industry drama that I really don't care for. Let's help people invest, buy homes, sell homes, and that's the end of it. These folks are really running a whole soap opera with these lawsuits and this and that, and it just makes it more difficult for the regular homeowner to buy or sell. That's it. It's these people in suits with this and that and legal teams and all this money to throw advocating. Look, I'm a just tell you straight up, I don't care. All right, let's keep it moving. Man, look, we got the defense secretary, some call him not a DEI hire, but a DUI hire. If you know, you know. All right. But Hegseth blames leakers as signal crisis worsens. If you didn't know, right, the defense secretary Pete Hegseth had some war plans in a signal chat that got leaked. It's not supposed to be going down in there. I mean, I don't know. I'm not going to say that. I'm not going to say that. So I'll leave that right there. But look, Pete shared via private signal chats with family and his personal attorney about disgruntled Pentagon employees attempting to sabotage Trump's agenda. Sure, all right. So Hegseth is now under investigation by the Pentagon's IG, Inspector General, for these communications and a prior incident involving a chat about Yemen strikes. All right, the use of private messaging apps like Signal for official government business is facing intense scrutiny. what I'll say about this is, we were using WhatsApp, and then we found out Russia was like hacking WhatsApp. And then we thought Signal was safe, but apparently Signal is not safe. So, I mean, look, I'm not saying my war plans were as important as Pete's, but I mean, bro, you're the SecDef. If you're using Signal, like, bro, we were dropping small. I'm not even gonna, bro. I'm not even gonna say that. Look, let's keep it moving. That's all I gotta say about the defense secretary. It's not much news here. Not much news here. Oh man, what else we got going on? This year has been so exciting. So what I have been finding exciting is the talk about the dollar. A lot of people aren't talking about the purchasing power of the dollar, especially in comparison around the world, and how it seems like we're decoupling from the world using the dollar as a reserve currency. As we know, that has been a thing, but it just, I feel like that's possibly the tipping point for a lot of these things. We know that most, if not all, wars have been really incited by banking, from the banking sector. It came down to banking or trade, something of those two just throughout history. So I feel like, and we're going through a trade war right now. Coincidentally, we're going through a trade war. We got number 2 China flexing. We got Russia posturing as well for the last couple years. We have the end of the Brentwood Agreement, where the American dollar was the reserve currency of the world. We have BRICS coming together and trying to get off of the dollar, de-dollarization. So I see this all coming to a head. I just don't know when. And I feel like that would be the big shift into the digital system. Possibly New World Order type, maybe a shuffle in the world powers, and yeah, the next cycle, let's say, all together. So I feel like that's going to happen within the next 5 to definitely 10 years. But we got to keep following the narrative. It's like a soap opera, literally. It's like every day I wake up, I'm like, what's going on today's episode of America, the reality show? So the dollar has shown recent volatility, and that's challenging the strong consensus narrative that the dollar is destined to crash, right? I mean, it's fiat money. We just keep printing it over and over and over and over again. And there are people that suggest that watching the Asian trading patterns is important because heavy selling might indicate a desire to sell, while lack of selling at high levels could mean forced selling due to the dollar needs, right? Now the dollar's direction, I mean, when we're talking about trade, inflation, commodity, and investment returns, obviously it's complex. We have sentiment, which is how the market feels, right? Debt cycles, capital flows, and geopolitics is the biggest one, like I said. But where do we think it's really going to go? That's really what all of this boils down to, right? Is where do we think the dollar is going to go? Do we think more countries are going to use the dollar or less countries are going to use the dollar? Do you think there's going to be more trade using the dollar or less trade using the dollar? Depending on how you answer that question should tell you if you want to have your storage of value be the dollar, right? Which means, oh, I got $100,000 in a safe, because that's where I keep all my savings. Well, if the dollar's getting eaten up by inflation and its spending power is going down, especially compared to other currencies, then it's not a good bet to just have your cash in there. Having a little bit of cash for emergencies and so I get that. And to you, a little bit of cash, that's up to you. But to have the bulk of your savings or the bulk of your investments sitting in cash, not a wise choice. So let's keep going. I'm tired of talking about the dollar. But look, I want you to know, please do not forget to tap like and subscribe. Tap the like button, subscribe, follow wherever you're watching. Look, you could be watching on YouTube. You could be watching on Instagram. You could be watching on Facebook. You could be watching me on Dish TV, on your DVR, right? Some of you kids don't know what that is, right? On AOL, wherever you're watching me, follow, like, subscribe, comment, please, so I know what topics to talk about. Every single day, I create content that helps you save money, energy, and time when it comes to real estate, business, stocks, and finance. So let's keep it moving. Oh, man. So if we were just talking about having a bunch of cash saved up under your bed, well, the alternative is having a high yield savings account, and some of them are offering 5%, right? Let's see, we got top high yield savings accounts are offering an APY as high as 5%. Now, a recent increase from 4.6. Okay. Now, these accounts provide a significant higher interest rate than traditional savings, right? You go into USAA or Navy Federal, take a look at their CDs, take a look at their high interest savings account, high yield, sorry, not high interest. Now, I'm not going to say this is where you should put your money, but if I wanted to stay very liquid, this may be a place I put ready cash that I need. I'm not going to put 90% of my investments, my savings, into a high yield savings account. All right. Do your own research. Do your own research. Now, 5%, not too bad. You also can take a look at bonds, treasury bonds. You know, people do that too instead of stocks. To me, not as liquid, right? Definitely not as liquid as a high yield savings account. But do your own research and figure out what's best for you. Now, remember, you have different pots. You have storage of value. You have your investments, you have your savings, I just need a few thousand to go from here to here, right? But like I said before, you don't want most of your investments and your savings in cash. We have inflation and de-dollarization going on. So put your money into a good SOV and or a good high yield savings account to keep some money liquid. All right, let's keep it moving. Let's keep it moving here. Finally, look. So the S&P 500 and the NASDAQ just experienced a death cross in the stock market. Now, what does a death cross mean? So you have your 200-day moving average and your 50-day moving average. Traditionally on a stock, which way are we going? Okay, we're going over here. So traditionally on a stock, these bands will hug the stock, right? And they'll go with it, but they're two outer bands, right? So you have a 200-day and 50-day. These are moving averages. If you're using an EMA, it's an exponential moving average, but they're just bands that roughly hug the actual stock price. So a death cross is where we have a crossover where these two, the 200-day and the 500, or excuse me, the 50, are crossing over, and they shouldn't, because they should both run, I'm not going to say exactly parallel, but like this, as bands around the center of the price action of the stock, the price value. So once that cross happens, you have a death cross, which isn't good. If you didn't know, the name death cross is not a good thing. When has it ever been a good thing? If there was a death cross in the Pirates of the Caribbean, man, that thing would be like cursed. Anyways, all right, look. Oh man. So what does that mean? I mean, what's this? It's not a good thing. Look, we have the death cross. You have the 10-2. You have the 10-2 crossing over, right? I'm probably just saying a bunch of stuff that you don't get. What I'm saying is there are these indicators that have been checked and have bounced back and forth, cross up, cross down over the last couple years. Okay. And we forget that every 10 years, you're supposed to have a recession. Just in theory, with the money system that we have, the fiat capitalism, America, about every 10 years. Right? So we had 07, 08 come in, crazy. So that means around 2018, 17, we should have had a crash. Well, we saw some things sort of that in 18, and then again in 20, and then in 22, right? But we didn't have an 07, 08. Now, I'm not saying I would want in 07, 08. There was a lot of pain. There was a lot of pain there for folks. What I am saying is I believe it's a cyclical system that is made to do that. And in this system, it must occur. So I felt like during our run-up in 18, 20, and 22, but COVID and all that stuff, we couldn't afford to have a crash. And we've been still recovering from then. People don't realize that. We had the highest, we had 14% unemployment. Economy was decimated. Interest rates almost at 0%. We're doing everything we could to save the economy. But we still didn't go down, I would say, that bad. And I have a feeling that we are still yet to experience that. I don't know what economic miracle would have to come up for us to completely dodge any type of downward crash that cyclically occurs in these markets. especially because these markets, it's not just one market. We're talking banking, geopolitics, right? We're talking about top world banking systems, world geopolitics, countries going to war over money, and mostly over money. As we know, most wars have been started because of banking. All right. So all I have to say is be prepared. Be prepared with your cash. Be prepared with everything, honestly. Savings, investments, all of it. Don't be afraid of the dip. Do your research and buy the dip if you feel that it's right. Right? You don't have to buy a large amount. You can dollar cost average, DCA, Google what that is. You just buy a certain amount every month. I'm gonna spend $400, $500 on stocks every month, no matter what, no matter if the market's going up or down or whatever it is, right? Have a plan and choose to invest, whether we have a death cross, whether we have the 10-2 crossing over, whether we're hitting all these other metrics, right? Still choose to invest, but do your own research. All right, let's keep it moving. Let's keep it moving. So look, we have banks expanding crypto operations in the United States. Wow, and this really is due to easing of regulations, as we have seen. There has been an environment of easing regulations concerning crypto and Bitcoin in the US, and this is attracting traditional banks and financial institutions to expand into the crypto space. What a coincidence. What a coincidence that they're once again pushing into the crypto space now with lesser regulations, right? We saw Sam Bankman-Fried getting locked up and all these regulations put in place to try to protect people. It happens all the time. Just follow the history of money, and new things happen like this all the time. You got scammers, great, right? Everyone was saying crypto was for scammers and drug dealers, and then you got Larry Fink, one of the richest companies on earth, creating a Bitcoin ETF. To me, they said, oh, it's illegal. They set up the game so that they can make money off of it, and then they said, all right, play the game. Right? They did the same thing with alcohol and marijuana in the US. So something to think about. Something to think about. So the signals that are growing in mainstream acceptance of institutional adoption of crypto, right? That's what they're waiting for. They're waiting for more than enough people to adopt crypto to then say, okay, we got them. They're comfortable with it. Let's switch to this whole new system, right? For some of us, you can think of us going from the cash system to kind of the credit card system. And now the credit card system is all debt. And now we're exploding at the seams with too much debt, right? Too much zeros and ones. It's not even real debt. It's numbers in a computer system. And then now we go to the creation of a new currency, crypto, which is like going back to the creation of the dollar, the fiat. So if you study the creation of the dollar, and you study the creation of the Federal Reserve, and you study how they made gold illegal to hold by American citizens, and that they pretty much had to trade in their gold for greenbacks, for dollars, because they wanted to stock up the Federal Reserve, right, with gold. So if Bitcoin is digital gold and may be used as a coupled currency that's tied to US coin, whatever it is, right? Do you think that they would possibly confiscate your Bitcoin in the future like they did confiscate gold back in 1919? There was an executive order. Something to think about. You know what? And actually, let's look it up right now. And on gold, let's look it up. Where is it? So Executive Order 6102 forbade ownership of quantities of gold coin, bullions, and gold certificates worth in excess of $100 at that time. What a coincidence, right? So if we think that was the case, where at one time they made gold illegal because they needed all the gold to back up the dollars that they wanted to print, well, if they do the same play, they do the same play again. Hey, we make Bitcoin gold. They make a digital currency, USD dollar, whatever it is. They link the USD dollar to the Bitcoin, and now we restart the game all over again, right? Watch them wash away people's debts, fiat debts. We transfer to a new system. Oh, this is great. This is awesome. They're going to take away my $10,000 of debt and put me into the crypto system. This is going to be cool. Right? But little do we know, well, now they're tracking every single one of your transactions. So be careful in this new age that we have been moving into, and stay up to date on it. Stay up to date on it. And this one's really surprising. We have New Mexico betting on quantum computing for civilian and military applications. So New Mexico is strategically positioning itself to become a major hub for quantum computing, leveraging its existing national defense research facilities like Sandia National Laboratories and Los Alamos National Laboratory. All right. Now, this is a key initiative in the state's quantum moonshot. In New Mexico, baby, you had to do something. I mean, this may be it. This may be it for y'all, but I don't know if that's the move, just to be super militarized. I don't know. But look, they have a quantum. New Mexico has a quantum moonshot program, which is dedicated to fostering the development in quantum technologies with both civilian and crucial military applications. Okay, okay. I mean, we've known that when I was talking about the space race before, right? The space race was a cover up for just crazy advancement of tech. And also during our last space race after World War II, what scientists did we employ? Like, from where were they after the war? Those specific scientists that were working for a certain side. I wonder where they went to work after the war. Like maybe NASA. Anyways, so that's just something to consider. That's something to consider. So basically, the space race really cover up for military applications, right? We're looking to put these chips and all this computer power in bombs, intercontinental bombs, aircraft, ships, submarines, drones, anything and everybody. Put a chip in there. You know what I mean? So, look, this really, really is important for New Mexico. For the rest of the world, it's all right. I hope they knock it out the park with quantum computing. I actually hope that they develop a good workforce there, because there's a bad stigma around New Mexico. I really don't know why people are so judgmental, especially Albuquerque. But regardless of that, if they could bring manufacturing there, sure, why not? Bring some manufacturing, bring really good jobs there, some factories. Why not? I'm all for it, right? Are you all for American manufacturing? I think so. With this trade war, a lot of people are talking about bringing jobs back to America. Look, a lot of the jobs that the Chinese got, Americans don't want them. Let's be real. Americans don't want them. What we should be bringing here is high-paying manufacturing. And we got to increase wages. I'm tired of this. I'm tired of hearing about affordability. It's not affordability. It's wages. The companies need to pay the employees more money. Pay them more money. Okay, how much profit are they making? How much profit are these companies making while their employees are 48 years old with all these kids making the same money I do? And I'm like, how do you do it? You know what I mean? Anyways, look, if there's one thing you do remember right now, it's to tap that like and subscribe button wherever you're watching, whether it's Instagram, Facebook, LinkedIn, whether you're somehow watching this on OnlyFans. I don't know. Who knows? Look, hit that like and subscribe and that follow button, and please leave a comment on any topics that you would like to know more about. I make content every single day, every single week, bring it straight to you to help you save money, energy, and time when it comes to real estate, business, stocks, and finance. All right, y'all, let's keep it moving. Let's keep it moving here. So look, we have our rate updates. Let's dive into this week's real estate and financial market updates. Whether you're buying, selling, or just keeping an eye on the market, it's important to stay up to date so you don't lose money, energy, and time. Let's keep it moving. So as of today, the conventional 30-year fixed is 6.94. Now, it could be lower, right? When we're talking about interest rates, which we'll go over this in a second, but interest rates and APR are different, okay? So if you see a little bit of a spread sometimes, some people may be posting the interest rate, some people may be posting the APR, okay? So look, we have the VA rate, which 4.5, right? 6.45. I just mentioned the conventional 30-year fixed rate is 6.94. The VA 30 rate is 6.45. So that's over a 0.5 drop. And the VA loan is so much better. You have no PMI, no private mortgage insurance, and possibly zero down payment. I like zero. $0 down on a home. I mean, who doesn't? So look, buyers, Rates saw a slight dip, okay, but they offer a small improvement in affordability. So take advantage of it. If you were possibly on the line recently, maybe you spoke to a lender or something like that, maybe take a look. You may be able to qualify. It may be affordable, or maybe we got to decrease the purchase price a little bit, right, to work with the interest rates, and that's okay. I think that's better than not getting a deal and renting for another 2 to 3 years. People don't realize every year you rent, there's an increase in appreciation of about $24,000. So unless you can save more than $24,000 every year, buy now. If you can afford it. If you can afford it now. Don't continue just thinking saving. I got to save up $60,000 to buy a property, especially if you have a VA loan. Please, if you have a VA loan, make an appointment right now, themilitaryrealtor.us, to talk to me. You get a free consultation. I'll get you set up wherever you are in the nation so we can have a conversation about you becoming a homeowner. Or maybe you currently own right now and you want to sell, buy another one, or you want to do an exchange, whatever it is. Let's have the conversation now and have a free conversation, right? Who doesn't like free? So it's a free conversation, consultation. Go visit themilitaryrealtor.us, book your appointment. So let's keep going. Sellers. For sellers, a minor rate decrease may help maintain buyer interest, right? So you may get a little bit more of demand with affordability increasing, but overall rates remain elevated compared to recent years. Look, they're elevated compared to recent years. That's the issue, is we only want to compare to the most recent years. Stop it. Stop it. Memory goes back farther than that. You can Google it real quick. Look at the history of interest rates, which has been on average about 6% since the start. Average 6%. You got people in the 80s doing deals at like 15%. Wild, right? Wild. So look, interest rate and APR are both about how much extra money you pay when you borrow money. So we're going to break down interest rates and APR. So an interest rate is just how much extra money you pay back each year for borrowing money. Okay? I'll repeat it again. Interest rate is just how much extra money you pay back each year for borrowing money. An APR, an annual percentage rate, includes the interest rate plus other fees or costs you have to pay when borrowing. So look, that's the difference. Includes the interest rate plus, okay, plus other fees or costs you have to pay when borrowing money. Could be closing costs, transaction costs, credit reports, stuff like that, right? So the APR is overall. Think about the APR is interest rate plus other stuff. All right? Interest and interest rate is the extra money you have to pay on the money you're borrowing. That's it. It's just the interest. APR is interest plus cost. All right? Let's keep going. Let's keep going. So just so you really understand it here, our interest rate, you may promise me, let's say you're promising me, right? So you may promise to give me 1 crayon, right? This is for the Marines out there. If you didn't know, this is Marine proof, okay? We're explaining interest rates and APR, which is annual percentage rate, okay? So if you were to think of just your interest rate, right, you promise to give me 1 extra crayon for every 10 crayons I let you borrow, right? So here, I'm gonna let you borrow 10 crayons, and you're gonna give me 1 extra crayon for every 10, okay? Now an APR is you promise to give the extra crayon, 1 extra crayon to me, plus 1 candy, because I helped you count your crayons. You know, after all this time, you're like, oh, help me figure out how many crayons I got. Okay, cool, I'll help you count them too. That's an extra cost. So now I got the interest rate plus the cost. That is APR. Interest rate is just interest. APR is interest plus cost. All right, that was Marine proof. Don't forget it. Let's keep it moving. Oh man, so we have the Federal Reserve giving us an update here through CME. I mean, it's not the Federal Reserve themselves, but it's CME Fed Watch Tool. And as of today, the next meeting still May 7th. There's not an emergency meeting or anything like that, but there's a 5.7% chance of a 25 basis point rate cut. Okay, that's low because let's see. Let's pull it up here, and I'm going to show you guys because I want you guys to get familiar with this so you guys can find it. Just Google CME Fed Watch Tool, and I'm going to share this right here. Boom. Okay, so we can see right here, right? That's the meeting date right here. Got it? And we go to the chart here. This is our current level right here between 425 and 450, and we know that because we can go right here and it says current, right? So if someone asks you, hey, what's the current Fed rate? You can go right here and go see, okay, we're between 425 and 450. It's a range. They don't just set it at, we're at 425 or we're at 450. There's a range, right? A very, very, very tight range right there. Whew. So, and this updated. This actually updated because I pulled this a couple hours ago. All my numbers are fresh. I do it day of, I don't got someone else doing it for me a couple days before, nothing like that. But this number is now 4.9. Okay, 4.9. And look, you can see over here that a week ago it was a 14.7% percentage that we would get a cut during the May 7th. So in this last week, right, and even yesterday, the 22nd, it was a 7.8%, and now it's at pretty much 5% today. So look at how fast that these can change, right? Just from current events happening. The World Economic Forum chairman standing down, the Pope passing, right? Trump's wig flying off. Who knows, bro? Who knows? But look, this is where you come find out, okay? So we know our next meeting is May 7th, so we put that on the calendar and pay attention because Jerome Powell, the Fed chair, he's going to speak and he's going to give notes. And we watch. We watch live and we're like this waiting. And the market, you can see the market is waiting too because you have traders that are sitting there watching, waiting for one negative or positive sentiment. And they're buying or selling, buying or selling. And we're sitting there waiting for these signals of what may happen. All right. So if you're interested in knowing what the Fed fund rate is, which the Fed fund rate is where mortgage rates are derived from. The Fed fund rate is on average about 2% higher, or excuse me, lower than what the mortgage rate is. So for example, like right now, our target is between 425 and 450. So add 2%, add 2 points onto that. So about 6.25, 650. That's about where mortgage rates in theory would be, and that's about what they are right now currently. All right, so let's keep it moving. Oh man, let me stop this real quick. So yeah, that's what's going on with the Fed. And now one of our favorite segments, I'm gonna say one of my favorite segments, but we have a word of the week, and the word of the week is escrow. Okay. Escrow is a neutral third party that holds funds or documents related to a real estate transaction until all conditions of the agreement are met. So pretty much we have a contract that goes in. Hey, we're under contract on this property. We go into escrow. A neutral third party handles everything to make sure that we're following the contract and everything is good to go. Now, buyers and sellers. Escrow provides security for both parties. Okay, it's not just the buyer, it's not just the seller. Some people think it's just for the seller because escrow may hold your earnest money from the buyer. So when you go into a transaction, a buyer may need earnest money, which isn't a down payment, but it's good faith money between them and the seller. And a third party, like escrow, title company, right, they will take the check or take the money, whatever it is, and hold it until the transaction goes through and then it gets released, possibly back to the buyer. It could possibly go to the transaction, or depending on how the transaction goes, the buyer could forfeit that earnest money and the seller could get that earnest money and keep the house. A lot of people don't know that. So be careful with your earnest money a lot of times. But that is the definition of escrow, all right? Oh, man. All right, let's keep it going. Let's keep it going. So look, in my local zip code here for single-family homes, we have a median of 22 days on the market, okay? And this is actually favoring buyers because we have gone up slightly since last month. Now, our median close to list price percentage. Now, what is that? So the close price to what it was listed at, that ratio, right? So for example, if you list it at 500,000, but it actually sells for 490, right? So that ratio is going to be under 100 because it's below. 100% is what you listed it for, which is 500,000. But if you end up selling it for, let's say, 490, right? Concessions, whatever it is, it comes out to 490. Now you're below that ratio, that 100. But if you're above it, it sells for 550. Now you're up there, right? Because that's 10%. So now you're at 110%. Okay? So that's a good metric to really pay attention to, especially where you're trying to buy or sell. So right now in this local area, it's actually 100%, so it hasn't changed. Buyers aren't getting a discount, and sellers, they're not getting a positive over asking, which is pretty amazing. But that means people are pricing the market right. They're pricing these properties not too far ahead, not too far behind, and that we're not having too many price changes. Earlier, I reported that there was about 33.9% of price cuts on active listings. Now, that may be a nationwide average, but this number here of close to list price ratio of 100% is telling me a different story, but for my local zip code area. That is different than nationwide, okay? I don't want you to listen to the news, get scared about what's going on and all these national and average numbers, blah, 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 when everything in your zip code is going just fine, all right? Don't forget it. So look, for buyers, homes are taking significantly longer to sell compared to last year, okay? Now, this is giving buyers more leverage and time, so don't forget that, my buyers, okay? Now, be prepared to offer the list price on average. Like we said, 100% of these homes with this data set here have sold at the close to list price. So we got listed for 500, it's sold for 500, okay? But be prepared to offer the list price if you really want the property. Tell people, look, I'll negotiate. I fight like Mike Tyson. I'm in the ring. But if you really, really want that property and you don't care about the negotiating concessions, go at the list price, or go above if you can afford it, if you know it's going to be competitive, right? Either you want the property or you're willing to negotiate, all right? So for sellers, homes are they're fetching a higher list price, but the extended time on market underscores that there's a need for competitive pricing, okay? An excellent presentation to attract offers quickly, right? Attract offers quickly. If you're going to list, price it right. Price ahead of the market, where the market is going, okay? And we want to get people in. So you may actually even list it under what you think it's valued. Why wouldn't you? To get more eyes on it, right? To get more bidders, possibly get a bidding war. You list a property for 500K, or excuse me, it's worth 500K. You know it's worth 500K. You list it at 485. Then you got 5 offers in. 485, 480, 490, 487, 488. Right, that's 5 right there. Okay, so let's take a look at 485, 487, 488, 490. So that's 4 offers right there at or above, at or above your ask price. Now you still want to get to that, what is it actually worth price. So now you're looking to drive them up. Okay, we'll have those 4 compete and drive them up to that 5. So you went from 45 and you drove them up to that 5, but they were competing amongst themselves and they got there on their own. What do I know? I'm just a licensed realtor, right? But look, all right, y'all know it's about that time, okay? We got to wrap this up. Please drop a comment below to let me know your thoughts on these topics and any topics you want me to follow up on tomorrow, the next day, the next week. It don't matter if it's an old topic, a new topic, hot topic, Lakers in 5. No, just play. But let me know what you want covered. Whatever it is, it could be a small topic, a big topic, something specific, but drop it in the comments. I want to know what you're thinking about and what's on your mind, okay? And when you're ready to start your real estate journey, not if, when you're ready to start your real estate journey, visit themilitaryrealtor.us to set up your free consultation for us to talk about real estate. And if you're a service member currently serving, veteran, National Guard, reservist, Coast Guard, whatever, Puddle Pirates, it doesn't matter. Anyone, everyone, if you want to talk about your career, transitioning out, staying in, what you got going on, how to use your VA loan, go to the militaryrealtor.us and set up your free consultation. All right. And look, take care. God bless. And don't forget, ownership is freedom. All right, y'all. Peace.